Inflation has been a major talking point this year. But what does this mean for your investing? In this video, we'll take you through its importance, past examples of inflation, and what markets you should be watching out for. First of all, let's have a recap. What is inflation? Inflation is the rate at which prices for goods and services are rising over time. It's measured by the Consumer Price Index, the CPI, which is a basket of goods and services that are commonly purchased by consumers. The CPI is calculated every month and it shows how much prices have changed since the previous month. Now, why is inflation so important? High inflation introduces uncertainty and makes it hard and difficult for businesses and households to plan accordingly. It's now accepted that low and stable inflation is a more desired phenomenon. Without inflation, some prices will be falling, and that will be challenging for affected businesses. Knowing this, what can we learn from the past? Similarities between this current period of inflation and the first half of the 1970s are striking. Both periods were characterized by war and associated rises in oil prices, as well as a sharp increase in commodity prices. In 1974, a peak in the commodity market also meant a peak in inflation. The commodity price index peaked in November 1974, and that's when the highest inflation was recorded. This suggests that the market's expectation of decline in inflation is likely to be correct. In short, the past suggests that the current period of inflation is likely to come to an end soon. However, investors should be aware that the ISM Prices Paid Index is not as reliable an indicator of inflation as a GSCI index. So, what markets should you watch for? The relationship between equity markets and inflation is complex. However, commodities are considered a leading indicator of inflation as prices of goods are highly dependent on raw material costs. Energy commodities are particularly important to watch as the world is highly dependent on conventional energy sources like oil, natural gas, and coal. When energy prices rise sharply, producers pass on those costs to consumers, which can further fuel inflation. If you learned something from this video, make sure you follow XTB to learn more about trading and investing.